Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's episode, we're going to be talking about Snowflake's IPO. I hope you guys enjoy it, and if you guys do, make sure you guys smash the like button and subscribe to the channel if you guys aren't already. Also, you guys can use code Snowflake to get 50% off my course. We really talk about how to invest properly in the stock market. Anybody can buy random stocks, but it takes an educated investor to really make money, and that's really what we talk about. So make sure you guys use code Snowflake to get 50% off my course. Go ahead, check that out. First link down below. So now to jump into it, roll the intro. Let's go. Here. So a lot of people are saying that Snowflake is going to be the largest tech IPO in history. And that very statement is awesome for investors. The reason why I say that is this could be an opportunity to buy companies like Amazon, like Google, like Tesla at IPO prices, which for long-term growth investors, I think everybody is going to be taking a little stab at this IPO price, which could be awesome for traders, long-term investors, and really everyone. Now, honestly, another thing too is I probably think that there's going to be an IPO breakout, meaning once this stock IPOs, we have a stock squeeze up maybe 10, 15, 20%, and then we get some sell off to about fair value territory. Now, for long-term growth investors, honestly, it's nothing to be worried about that traders are making money because you guys care about the long-term, not the short-term volatility. So how does Snowflake's fundamentals look, and really what does the company do? So the company has a lot of awesome things, and really what's cool about it is they're direct competitors with Amazon, Google, Microsoft, and a lot of other data companies out there, because that's really what Snowflake focuses on, is data consumption. So here's a list of all the things that they do. They have a diverse data type capabilities. They have data volume, scalability. They have dramatic availability in compute resources. They have a multi-cloud and multi-region. They have a seamless and secure data sharing. So that's really the breakdown of the company, and you guys can see from the website that it is all streamlined and very, very modern looking. So now the reason why they're going ahead and releasing their IPO is because they need more of this. They need more cash. You know, they are growing at a very, very rapid rate, and one thing that they need is income and cash and investors to grow the company larger. Also, a lot of big corporations are actually investing in this company, such as Salesforce and Berkshire Hathaway. So if you guys want to invest like Warren Buffett, this could be a good opportunity to make some money just like he is. So now, how does the fundamentals really look? You know, how much money do they make, revenue, cash on hand, and all that stuff? Well, Snowflake has around $881 million in cash, which is actually really, really strong to see that. And they've been actually slowly growing that number over the past couple of years. So that's good, meaning that if their company slows down, they still have some cash on hand to pay off some things, you know, and really keep that company going, which is really good. Really good to see. Good job. Another awesome thing is that they are slowly increasing their gross profit and their margins. So that's really good to see as well. So overall, a company that is growing their revenue, growing their profit, and growing their margins is overall going to be a really solid company in the long term. And their revenue is growing at a very, very rapid rate. So now Snowflake is most likely going to have the ticker SNOW, S-N-O-W. So if you guys want to check it out in a couple days, that's going to be the ticker that they trade under. And they're going to be trading under the New York Stock Exchange, so you guys can buy, sell, do everything you guys normally do with any other stock. Now the projected cost per share is going to be around 80 to about 90 bucks per share. So for beginner investors, this is honestly a decent price point. You know, we're not investing into companies like Google that are like $1,500 a share. This company, we could actually load up on some share size. So for long-term growth investors, we could have a couple hundred shares that are worth $1,000 or so, and have some money in their stock account. So Snowflake's revenue is around $264 million, which is actually pretty decent. But here's the thing that's not too good, is their company's valued at a very, very high rate. Their company's valued at around $22 billion and growing. You know, there's some people that think it's worth $30 billion. And honestly, for a company that doesn't make that much money, I think that just that, you know, price point and, you know, that valuation could be a little high. But overall, everything's high right now, so it's nothing to be too worried about. So overall, should you invest in this company? My answer is yes. I do think that there is going to be some long and short-term potential with this stock. And the strategy that I would highly recommend using for this is going to be the strategy called dollar cost averaging. Really what you do is, let's say you guys have $10,000 to invest in Snowflake. So should you invest 10 grand right at the IPO price? No. The strategy is dollar cost averaging. So you take that $1,000, you have 10 grand, you take $1,000 and you invest it in the company over the next 10 months. The reason why this is so important is because you're gonna have all different price points. This is a growth stock that's gonna be very, very volatile, very heavily traded, meaning it's gonna have price swings. And if you guys can get in, you know, very, very consistent, $1,000 per month or whatever it is that you guys invest, you guys can get a good overall average price for the long term. Now, I know a lot of you guys are gonna debate me on the, you know, one lump sum or the dollar cost averaging, but my thought process is very similar to, like, if you guys would have invested in Uber. Uber was one of the most sought after stocks that year. Everybody wanted to get a piece of Uber or a piece of Lyft. Well, if you guys would have put a one lump sum of money in, you guys would be down around 64%, which is significantly higher than if you guys would have just had dollar cost averaging, which you guys would only be around 20 to about 30%. And if Uber ever turns around, you guys would have a very, very faster growth rate because your average price would be a lot lower. So overall, it's just personal preference, but that's my strategy and how I'm going to invest in Snowflake. I'm super excited to actually see this stock perform and actually kind of trade it and invest in it. I'm super excited, guys. So that is it. Don't forget to check out my course down below. We'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and overall stay safe out there. We'll see you tomorrow. Take care. Bam.